Yeah, hello and welcome to another update video about Ethereum. So Ethereum today reacted bearishly, like Bitcoin as well, and most of the majority of the market, in a bearish way to the core PCE inflation data. Yeah, we talked about it in the live stream earlier today, in the core PCE live stream, that the data would most likely lead to a drop because the inflation is higher than anticipated. Yeah, the market anticipated a certain number, I think it was 0.4%, and the actual core PCE data came in way higher. So that indicates inflation is running hotter and the market is pricing in further interest rate increases, which leads to a drop in the market. Yeah, it's a short-term catalyst, which resulted then in that downside move, because whenever inflation is running hotter than anticipated, then the market is priced in, you typically not always, but typically see a bearish reaction in the market. And yeah, nothing else is happening. You were prepared, especially everybody who attended the PCE live stream, core PCE, and if you watched the last few videos, you knew that should we drop below the first support area that was basically invalidated with today's inflation numbers, that we would most likely drop into this region here. And this is where we now found temporary support just above the 61.8 retracement. So we talk here about the area between 1572 and 1525. This is still a possible scenario that we put this extension in this fifth wave in place. Yeah, we discussed that in the last few videos, that there is a potential that this here is a wave 1, a wave 2, obviously back in November, December. We rallied in the third wave extension, came down in the fourth wave. Everything worked out quite nicely. And now here moving up in the fifth wave. And now, we see that those headwinds, that I've been warning about up here, and did talk to you about in the last few videos, that most easy money on the way up has been made. Now it could be that we face some headwinds. The move up could already be finished, and things are getting a little bit less clear. Now, the first scenario here, which I've highlighted as alternative, is that this wave 1, so that these 5 waves up are already complete. This is of course a possibility. And if that's the case, then you will probably see a drop below the 1525 level in an ABC pattern. So we will most likely do this: A wave down, B wave up, C wave down in a wave 2. So this will probably happen over several weeks, maybe even into April. Why so long? The reason is that this move lasted from November into February, assuming it's finished now. It could be finished, we talked about that. It certainly fulfilled all the minimum requirements for the move to the upside. It moved above the wave 3 high, hit a few Fibonacci extension targets. You can count it as a 5-wave move up, so it's finished. It can be finished, doesn't need to be. This support area will give us a clarity. So, and if it's finished, then we are most likely going to see this ABC pattern. And you would normally assume that a wave 2 takes around 60 to 100% of the time of the wave 1. Now this is the Fib extension tool, the time extension tool. And if you think about, this lasted from end of November until sort of middle of February. I mean, you would at least expect this correction to last into April. Everything else would surprise me. If it comes down faster, it will possibly rather be an impulsive move down and lead to a continuation of the bear market. Okay. So that is going to give us a good guide. So obviously the risk was there. The move up could have been finished, it could be finished, and we could be heading down now in this ABC correction. If that gets fairly clear, then we can look at what might be a possible support area for the A wave, to basically go long maybe and to trade the B wave, even though trading a B wave is always risky, but that you need to be aware of that, right? So this is typically the 38.2 Fibonacci retracement. We talk here about 1488. This could allow for a temporary bounce. If we drop below the 78.6 retracement here, which is at 1525, we might as well hit 1488, get a bounce, do the B wave rally, and come down in a C wave. This is the first scenario. This will become primary if we lose the 1525 level and sustain below that level. What happens if we hold 1525? Then we have to assume that this rally wasn't finished and that indeed we had here a wave 1 to the upside. This here is an ABC pattern, should find support in this area. This is a possible turning point. It could rally here in a third wave, then we could get a fourth and rally in a fifth. That could now take us into the $2,000 area. So for anybody who's brave, you could look at maybe entering somewhere in this region, but at the moment it doesn't look like as if we're turning around. But then again, always bear in mind, these coins can turn around at an instant. But these are really the key scenarios. If we get a bit more price action and clarity, I will attempt a detailed count on of the C wave. At the moment, I don't have enough information. It looks a bit messy. But the possibility is we came down in A wave. This was a B wave triangle, and we're now coming down in C, or even WXY. And it should then find support in here. And if it doesn't, then we're most likely in this deeper pullback scenario. And the advantage of that would be that we are getting some clarity about, is the bear market over or not? Because if this larger wave 2 is holding, we can rally to around $3,000 or so. But that's what the market will need to show us. Do we hold this support? Then we can get a third wave rally to the upside. But for now, it doesn't, at least I don't have any clear vision or any clear signals that this move down is finished. I think we may see one more low. I think Bitcoin is still dropping as it seems. And yeah, that's my update about Ethereum at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.